When we talk about building wealth, especially here in Canada, one of the biggest fears people have is what happens if the market crashes? The truth is, history is full of bad events, some of them absolutely devastating in the moment, and yet time and time again, the market has recovered and pushed higher. Let's take a journey back over the last 2 decades and look at some of these situations and how they have played out. Early 2000s, terror and uncertainty. So in 2001, the world was shaken by the 9/11 attacks. Markets plunged immediately as fear and uncertainty spread. Travel shut down, companies laid off workers, and investors got panicked. But within a couple of years, markets had recovered. And that was the first time I remember that even in the face of tragedy, the financial system kept moving forward. Then 2005, natural disaster strikes. When Hurricane Katrina slammed into the Gulf Coast, the storm caused over 125 billion in those dollars damages. It was one of the costliest natural disasters in U.S. history. Entire cities were underwater. At the time, many thought the economic fallout would cripple markets for years, and yet recovery came faster than expected, with stock markets pushing higher in the following years. Then go to 2008, the Great Recession. In 2008, arguably the biggest test of modern markets, the housing bubble burst. Major banks collapsed and credit froze. The Vanguard total stock market ETF dropped to around $60, wiping out trillions in value. People lost jobs, homes, and savings. It felt like the financial system itself was on the brink of collapse. But here's what happened. By 2013, just 5 years later, markets had not only recovered, they were making all-time highs. And the lesson? Even the worst financial crisis in decades couldn't stop long-term growth. You look at 2011, we saw the European debt crisis unfold. Countries like Greece and Spain were on the edge of default, and many feared that the Eurozone would be collapsing. Stocks pulled back sharply, but within a year, the market had bounced back. Not long after that, in 2014 and 2015, we faced a massive oil crash. Energy stocks were crashing, oil-producing economies were suffering, and investors braced for the prolonged turndown. Again, the market absorbed the shock and recovered. In 2018, recession fears sparked another broad sell-off. Headlines screamed about trade wars and slowing growth. Many investors thought it was another 2008, but once again, downturn didn't last. The following year, the markets were hitting fresh highs. Then came 2020, the global pandemic. This was one of the sharpest and fastest declines in stock market history. Within weeks, stocks plunged as economies locked down, millions lost their jobs, and the future looked so uncertain. For many, it felt like the world had stopped. But here was the remarkable part. Within months, the market began one of the strongest rebounds it had ever seen. By the end of 2020 and into 2021, stocks weren't just recovering, they were climbing to all-time highs. Now, in 2022, investors faced a double blow. Russia invaded Ukraine, triggering geopolitical uncertainty, while at the same time, an inflation crisis sent interest rates soaring. Markets fell hard, yet by late 2023 and into 2024, the rebound was underway, pushing stock prices to record highs. So what's the big picture? What does history tell us? From terrorist attacks to natural disasters to financial collapses to wars and pandemics, markets have always faced challenges. But the long-term trend has been higher, significantly higher over the long term. So if you zoom out, the story isn't about the dips, the story is about the resilience. Every recovery has rewarded the investors who stayed and were patient. So the final lesson for Canadian wealth builders is, as Canadian wealth builders, takeaway is clear. Don't let fear push you into bad decisions. You don't need to predict the next crisis. There always will be another one. What matters is your discipline, your diversification, and your ability to stay invested through the storm. And that is really part of it, because some of the biggest rebounds happen quite quickly. Because history shows this, events come and go, but the market keeps moving forward. And those who stay the course are the ones who build real wealth over time, the Canadian way. My name's Roland Kym. I hope you like this. Please subscribe to my channel. Thanks for watching.